Hello and welcome back, everyone. We're looking at lesson 3-3, and this particular objective, this particular lesson deals with transactions affecting owner's equity and asset accounts. So we're looking at how to analyze and record transactions that affect owner's equity and how to analyze and record sales and then receipt of cash on account. Received cash from sales, right? So we're going to look at a transaction in our general journal here. The one we're looking at is from January 10th, and it says received cash from sales in the amount of $1,100. And for this particular example, the source document that we'll be looking for is the calculator tape. And remember from 3-1, source documents prove the transactions happened related to the business. So we would be seeing an increase in our cash account of $1,100, and we would also be seeing an increase in our sales account of $1,100. That would be our debit to cash and our credit to sales. So when we record this in our general journal, we would note the date first, and we would also go ahead and note the actual name of the account impacted under the account title or cash. And we would make sure that we put that completely over on the left-hand side of the transaction line. The next step then is to post the debit correctly, so $1,100. You're going to want to indent a little bit. It says 1 centimeter, but you want to make sure that you consistently indent the second line on your journal. And it looks like we're going to be posting our credit to our sales account of $1,100. Finally, you always want to make sure that you note the source document that you're referencing for this entry into your general journal. And in this case, we're indicating a T10 because it's the calculator tape number 10. Okay, sold services on account. So on January 12th, we sold services on account to Main Street Services, and we are going to issue sales invoice number 1 to Main Street Services for this transaction. Our first step is always to think about the accounts that are going to be impacted by this transaction, and the first one that's impacted would be accounts receivable, and we're going to increase the amount of our accounts receivable by $500, so that's our debit. And we are also going to increase our sales amount by $500 as well. That would be our credit. When we go ahead and look at our general journal so that we can go ahead and enter this transaction, we're going to start with the date, which is January 12th. We're going to go ahead and indicate that it's accounts receivable and the account is at Main Street Services in the amount of $500. Right below that, we're going to indicate the account to credit, which is sales. And then finally, we always have to indicate the source document that we're using to document this transaction. And in this case, it's sales invoice 1. So it would be S1. All right, third transaction here. Paid cash for an expense. On January 12th, we paid cash for communications bill, including our cell phone and our internet, and it was only $80. And for those of you playing along at home, I wish I could have a cell phone and internet bill that was only $80. I don't know exactly where these guys are getting service through, but clearly it's not Verizon. We're going to go ahead and indicate the source document is check number 4. So the two accounts that are going to be impacted here, communications expense, and we're going to increase our expenses. So we're going to be doing a debit there on expense. And we're going to be crediting our cash account because the balance in our cash account is decreasing. We go ahead and look at our general journal so that we can enter in this transaction. It happened on January 12th. It's a debit to communication expense. So that's on the first line, $80. And the second line here then is the cash account where we're going to do a credit of $80. And finally, we cannot forget to note which source document we're referencing, which in this case we're saying C4 for check number 4. All right, right below that, we're going to do a second entry to pay cash for an expense. On January 15th, we're paying cash to rent some equipment for $400. If this was me personally, it would be renting a carpet cleaner to go ahead and make sure my carpets look fantastic when I move into my new house. All right, so the two accounts that are impacted, equipment rental expense, and we are increasing the amount of the expense, and we are decreasing the amount of our cash. As we look at this, our second transaction on the journal here is on the 15th for equipment rental, and we're debiting the equipment rental account so that we increase the balance in that account by $400. And then we're going to go ahead and post the credit to cash so that we decrease the amount of cash in our account by $400. And then finally, don't forget to note that we paid for this using check number 5, and so our source document is C5. Cash received on account. All right. On the 16th, then, those folks at Main Street Services decided to pay us a little bit for the service we provided to them. They paid us $200, and we wrote receipt number 2 to acknowledge that we received that money. Cash account, our cash account is increasing, so that would be our debit. Our accounts receivable is decreasing, so that's going to be our credit entry. Okay, so as we look at our general journal here on January 16, we're going to note our cash first, and our cash is being debited $200. We're going to go ahead and credit accounts receivable for the same $200, and we're going to remember to note that the source document is receipt number 2. We're going to pay out some cash to the owner to withdraw some equity in the business. On January 16th, we're going to pay cash to the owner for withdrawal of equity of $350, and it's check number 6 that's doing this. So the first thing we want to note is that the drawing account for the owner, we're going to be increasing. So we're increasing the balance in this account because we're increasing the amount of draw, and the result of increasing the amount of draw is that owner's equity is actually reduced. So our cash balance is reduced by $350, which means a debit to the draw account and a credit to cash. So within our general journal on January 16th, the drawing account, we're writing the date in, and then we're going to debit or increase the amount of money that Michael Delgado has drawn from the business. And remember, the more money he takes out of the business, the more the owner's equity will be reduced. And this is one of those accounts that has a twofold impact here. We're going to go ahead then and credit cash, which is $350. And we're going to indicate the source document of C6 because it was check number 6. Now, if you had any confusion over why we would debit the draw account for Michael Delgado in this situation, I would encourage you to look back in your book on page 47 and the chart where we're noticing that Michael Delgado draw account really looks like a sub-T account of owner's equity. All right, finally, let's audit our understanding. So some questions we want to ask ourselves. When cash is received from sales, which account is listed on the first line of the entry? And we always want to start with what two accounts are being impacted, and then which account is the debit applied to, because the first line is always the debit. Our second question is, when cash is received from sales, which account is listed on the second line? So then the second line is always for the credit. When services are sold on account, which account is listed on the second line of the entry? So when we're selling services on account, you want to consider which is the debit transaction and which is the credit transaction. In this example, you want to focus on which is the credit. And then when cash is paid for any reason, what abbreviation do we use for the source document? Finally, when cash is received on account, what abbreviation is used for the source document? You want to make sure you can think through those answers. After you do, go ahead and complete the form. And finally, go and do the work together and on your own transactions in Aplia.